focusing on our female viewers. Now, if you're watching right now, you don't have an equity portfolio or a mutual fund portfolio, don't worry, it's never too late to start. And we're going to start today. To help us, we have Dhirendra Kumar, whose advice has helped several investors in the past on this channel. Dhirendra, good afternoon and thank you for joining us. Now, before we go any further, I want to first give you our email ID. You can write it down. Send us any question you have about your money or your investments. Dhirendra, let's start off. Several of the women who write to us use fixed deposits as investments because that's what they're familiar with. They're not sure how equity works. Given where the market is right now, is this a good time to start an equity portfolio? Would you advise that?
Yes, because saving is not enough. I think everybody will understand that what inflation is. If you just keep saving your money, and even if it earns a nominal return, which typically you are getting reasonable return in fixed deposit, but it was not enough to beat inflation. So effectively the worth of your money goes down. So all your long-term savings, you must consider equity. If not all, if you are extremely uncomfortable with the volatility, you should still get started with a small part in a methodical way. And there are ways to mitigate that risk. So for your long-term savings, must consider equity, all of it or a part of it, to beat inflation.
Alright, so you must remember when we say long-term savings, we're talking about anything that you won't need for the next 3 years. So Dhirendra, if you're going to start off now and take baby steps into investing in equity, what sort of a fund should a beginner use?
Long-term savings, long-term investments, I would say that it's the money which you are unlikely to need in the foreseeable future. You don't have a plan to consume that money. 2 steps to take. One is that don't consider an equity fund to begin with if you have never invested in equity. Consider a balanced fund, and don't invest lump sum. Invest regularly. These are the only 2 ways. One, it will not be extremely volatile. It's a stable. Balanced fund tend to be far more stable with a third of the money into fixed income, so they don't tank with the market, which is extremely very upsetting for an investor getting started.
But Dhirendra, since you told us to use a balanced fund when we start investing, could you give us the name of a balanced fund that I can use if I'm a beginning investor, which means I'm assuming it's going to have to be slightly conservative because I'll want to take baby steps into that equity volatility?
Yes, one should consider a balanced fund, and the tax treatment is that. So the nuances of it's extremely efficient to be investing in this. 2-3 balanced fund, if I have to list, ICICI, HDFC and UTI balanced funds.
Alright, ICICI, HDFC and UTI balanced funds are funds that Dhirendra recommends for those of us who are just starting off and we're making our first investments in equity. We have a question from a female viewer. Revati has written in, Dhirendra. She's 45 years old. She's a working woman. She'd like to put aside 2,000 rupees every month for a period of 3 years. She wants you to help her pick a fund. Now, it's only 3 years she's investing for. 2,000 rupees a month, which means a systematic investment. Where would you like her to put that money?
I would, even fixed income funds, the dynamic bond fund could be a reasonable option. But, to optimize return and going by what the state of the market, I would still, I would suggest MIPs. And because this one is accumulating for the next 3 years, I would suggest that choose an MIP and invest in the growth plan of it, because the dividend plan might be very inconvenient and you don't need the dividend. So choose an MIP, and these funds typically don't invest more than 15-20% into equity. And next 3-year time frame, I think this combination and this allocation should prove to be reasonably rewarding.
Alright, the monthly income plans that Dhirendra recommends were on your screen. He recommended the Reliance MIP and the IDFC MIP, as he does on our shows. Dhirendra, thank you so much for answering our questions. Remember, you can send us an email. Email ID is at the bottom of your screen if you have questions for Dhirendra Kumar on this segment every day. A quick recap on what we learned in this segment. First-time investors, use a balanced fund. Start an SIP, make sure you're not trying to time the market. And if you want to invest for only 3 years, use a monthly income plan. It's more conservative, and make sure you pick the growth option on your fund.